Well, g'day folks, it's Matt Hayson here looking at everything impacting Sydney's property market this week. I do hope you enjoyed some downtime and re-energised over the short holiday break. Now, there is plenty unfolding in the property market as we wrap up April, which wasn't exactly a banner month for the property market in Sydney. Now, agents had circled April in their calendars very early in the year as we did expect to see some disruption, but then we had the addition of tariffs, we had a volatile share market, global economic uncertainty, and then the federal election looming, and many buyers decided to hit the pause button on their moving plans. Now, it seemed like everyone collectively decided that staying put was the safest bet in April. Now, let's get into the numbers. Last week, the auction clearance rate in Sydney dropped to a 4-month low of just 43.2%. That's pretty weak. Now, buy demand had also plummeted across pretty much all of the price ranges, and we can see with the latest totality data, that shows that Sydney values managed just a meagre 0.2% gain to close out April. So year to date right now, we're looking at very minimal growth in Sydney of 0.9%. Now, in short, it's been a buyer's market, and decent supply and weaker competition per property has been pushing many sellers to have to adjust their expectations in order to get their property sold. But change is in the air in May, and it is shaping up to be somewhat of a game changer. Now, let's get past this federal election this weekend, but some promising green shoots are certainly evident. This week's quarterly inflation data showed headline inflation was steady at 2.4%, with the RBA's preferred trim mean inflation dropping to 2.9%. So we're within that 2 to 3% band, which is preferred by the RBA. Now, this is the lowest level inflation's been in 3 years. Now, while nothing is guaranteed, it looks very likely that we will see a rate cut on May 20 when the RBA do meet next. Now, financial commentator Stephen Koukoulas has argued the RBA should be cutting more aggressively by 50 basis points, and a neutral cash setting would be 3 to 3.25%. Now, we're some 100 basis points off that now, but if that eventuates, I can tell you and be assured there will be property price growth. So what we can see occurring in the coming months is very interesting. The holiday period is behind us, so no more distractions and a very clear runway for buyers. The federal election will be run and done and out of the way, which means less political noise, and a rate cut on May 20 will improve borrowing power and confidence. Now, as we head into winter, we're likely to see a decline in new listings coming to market as well, and historically that increases competition. So it looks like we might be on the cusp of market shift in the coming months. Now, smart buyers, you need to be taking note of these conditions and developments, and I would suggest you should consider acting sooner rather than later. So that's what's unfolding in and around the property market this week. Stay savvy, and I'll catch you all next week.